Good day, grade 12 learners. Welcome to today's mathematical literacy lesson. My name is Mithala Jia. I am so excited. Learners, before we can even go any further, this lesson is brought to you by Gauteng Department of Education in collaboration with Sabono Discovery Center. Boys and girls, I know you have been waiting for this moment. From the beginning, actually from last year, you were waiting to sit in that chair of grade 12, whereby now you are called the senior of the school. Since you are a senior of the school, that means we need to pass. Remember, Gauteng province, it came position 3 last year in 2024. So with this term, I know you're going to make us very proud. We are going to go back to our position, which is position 1. Boys and girls, mine today, it's an interesting topic. That topic that you started with in grade 9. Actually, yes, from grade 9, and then you moved on to grade 10. You were doing financial documents in grade 10. We moved to grade 11. Financial documents were still there. Now it's in grade 12. The very same financial document that you have been doing in the past 2 years, you'll continue doing it this year in grade 12. Boys and girls, if we can check here, what we are saying is our focus for 2024. For 2025, sorry, boys and girls, you know, we're still back in 2024 because it's just the beginning of the year. So we are saying by the end of this lesson, boys and girls, this is what you should be able to do. Read information from a variety of documents such as till slips, account statements, household accounts or bills, invoices, pay slips, travel allowances, tax and loan documents, and also understand and check the calculations in financial documents. Once you can master these, you'll see, boys and girls, develop an understanding of difference between a VAT inclusive and a VAT exclusive and a VAT veil. So meaning with this point, they develop an understanding of the difference between a VAT inclusive, a VAT exclusive, and a VAT veil. So boys and girls, I know you have already started with your teachers, but where does this lesson start? It starts with terminology. I know your teachers have done terminology with you. There is no way your teacher can start a topic without doing the terminology, which is a tool that you are going to use for this lesson or for this financial document. So now let's have a look here. What we are saying here, we are saying under financial documents, this is where our focus will be. We are going to work with the following financial documents relating to personal or household finances, including the household bills. You know, the household bills, the ones that you get, like your utility bill, the municipality bill, the phone bill. Those are the household bills, for example. And then we have shopping documents, your till slip. What do we do with the till? Where do we get that till slip? After we have purchased the items in the shop, then the store will give us what? A till slip, the one that will produce when we leave the shops. Because now with the till slip, we are saying what is the importance of it, so that when you have something that is not okay out of your grocery list, or you've bought an item that you don't need, or when you arrive at home, you find that that item, it has expired, then you have an evidence to say, no, I bought this item on this particular day. Here's a proof that the till slip works there. Also, the household budgets. Before we can go any further, you have to do a budget. You have to know how much am I going to spend, and then now once you know how much are you going to spend, you are able to say, okay, by the time I get paid, this is what I must do. I must first start by paying my accounts and then do 1, 2, 3. That is a household budget. And then we continue having the documents related to workplace and small businesses, including the pay slip. There is no way that you're going to work for the whole month and get paid using an envelope. With that envelope, you still need to know the money that is in there. They need to give you a piece of document That shows your details, the employer's details. We'll do it in detail as we go along with our lesson, whereby I'll show you that the pay slip, it intends what? The employer's details, your details, and then the type of position that you're holding, how much are you earning, how much are they deducting from your salary, and then what is your take home. And then we'll discuss all those nitty-gritties when we come to the pay slip, as well as the budgets, quotations, invoices, a receipt, travel allowances, claim forms, and banking documents. I love this topic because it's so easy. It is so relatable because you can relate with everything that you're going to discuss. Documents relating to national or global and more complex financial topics, including the tax forms, loan documents. So the tax forms, we know everyone, we're supposed to pay tax in our country. For any business or even the personal income tax, everyone in the country is liable to pay tax if they are employed. And then also the loan documentation. When you go out and take a loan, there must be a documentation with that regard to say you took a loan to this value, this is the interest rate that they are charging, and then this is the interest, which is the amount that they are charging, and then in total how much you are going to pay by the end of the period. Remember, now you take a loan because you don't have money, you can't afford to do everything, so you rather do what? You rather take a loan to spend and then pay it back later in monthly installments for a certain period of time. Now, boys and girls, I've just given you a glimpse of financial documents. Now let us have a look at the glossary of terms or terminologies that are there in financial documents. The ones that I have highlighted, as you can see, they are black. There's an orange color, and then there's a black color. The ones that are in orange, I'm going to read them. These the glossary of terms that you'll find with financial documents, or when you talk about finance as a whole, as a topic. These are the terms that you're going to find. But for today, our focus will be on account, balance, the statement, the credits, the debit, the deposit, the income, and then the invoice, the net pay. Remember, we spoke about the salary, the pay slip, the quotations, the receipt, salaries, statements, tax, till slip, and VAT. So this is just but what we will be focusing on for today's lesson only, because we are doing what? We are dealing with financial documents. You need to be able to read that financial document. That's where the marks are, because in the exam it is around about 20 marks just reading the financial, interpreting the financial documents, and it's a level 1 type question because information is there. All that you need to do is to go through the document, analyze it, and then interpret it, get the answers. Boys and girls, now let's go into detail the words that I was talking about, the terms that are involved in financial documents. Number 1, we have an account. What is an account? That piece of statement or a piece of paper that you get, it's a record of income and expenditure. With an account, it shows an income. How much did you pay? That, or how, maybe let's take for example, when it comes to a bank statement. With a bank statement, you need to know the income, how much money is coming into the account, deposited into an account, and then the expenditure, the money that is going out. Same applies. If I have a clothing account, say for example, I've got an account with Woolworths. With Woolworths, then I get a statement, account statement. And then now with that account statement, it will show the amount that I am paying every month as a payment, and then the amount that I can spend. So now if every time when I spend, it will show an expenditure to say you have bought this, you have bought this is how much you have used, and then this is how much is remaining. And then once you pay, then now you know they can subtract it from what? From your balance. So we are just saying an account is a record of income and expenditure, and then we have the word balance. What are we talking about when you talk about balance? With a balance, we say balance is the difference between debits and credits. Remember, I said with a bank account, the money comes into your account and then the money goes out. And then now with these other clothing accounts, for example, the debits, we have the debits. The debits, it is when you buy. So as long as you keep on buying items, they come out as debits. And then the credits, that's when you pay now. It comes in as a credit. But you'll see in detail, like I'm saying, this, it works out the same. The money goes out. If I am buying, remember, I will be given a buying power. So the debits is when I buy, when I swipe, and then now come to the credits. The credits is money coming in as I pay the account. Now it becomes the credit because it will add a positive. So credit comes as a positive, and then debits is negative. That's how we simplify it. So the debits are negative because it's an expenditure, and then the credits is positive. It comes into the account. And then the bank statement, this one I've already touched on it. The details of all the transactions made from one bank account in each time period. So over a period of a month. Now with the period, over a period of a month, the bank statement, they will send it to your account. They will send it to you via email or maybe via post. Now, when you get that statement, it will show all the transactions that you have made, all the purchases, and when did you purchase those. So it means if I went to the shop on the 1st of February, it will show on the 1st of February, I made a purchase at this particular store for this amount. And then on the same date, I made a payment, so it will be having the income, the debits and the credits as well. So now it will show, the transaction will show everything that has happened in my account for a period of a month. So meaning it will be from the first day of the month, or maybe from the second day of the month up until the second day of the next month. So that will be a period of 30 days or a period of 31 days. It depends on that particular month. Now let's continue, boys and girls. Now we are saying with the credit, this is an entry in an account that shows a payment made into an account. Remember what I said to you when I was talking about the balance. I said the balance is the difference between the debits and the credits. And I said the credits the money coming in. So every time I make a payment, it comes into the account. It comes into my account. So it is shown by what? By positive. So now as soon as I start swiping my card, then it will go out as what now? As a negative. So we say when someone or an organization takes money out of your account, an entry in an account showing a payment made from an account, that means with debit, the money will be coming out of your account as you continue swiping or as you continue withdrawing. So it says it becomes a withdrawal, and then it shows as a negative because the money is going out of your account. But as soon as somebody deposits money into that account, it becomes a credit. So credit, the money is coming in, is positive. Debit, the money is going out, it is negative. I hope you are still with me, boys and girls. And I know that your teacher has done this with you. This is just a revision. I am not saying the teacher did something wrong. No, this is just a revision that I'm taking through with you so that you don't forget what you taught. Now, let's have a look at this one. It says debit balance. The debit balance is the amount owed to a lender or a seller. Who is a lender? The bank is the lender or a seller. So now if this person sells something, the money owed to that person, that person becomes a seller, and then the lender or anyone who borrows me money, who lends me money, we say that person is a lender. Then the debit balance, it is reflected in that way. Now with the debit order, The debit order, it is an arrangement. Look at this one. A debit order is an arrangement whereby you give permission now to you give permission to a third party to withdraw money from a bank account on a regular basis. So on a monthly basis, you say, okay, you, Absa Bank, please release the money to my multi-choice, to my DSTV account. So every month you need to pay multi-choice. So that means I am giving permission to I'm giving Absa to pay who? To pay multi-choice on my behalf. So that is a debit order. How regularly? On a monthly basis or on a regular basis. I say when it says the 30th, please make sure that you pay multi-choice. Every 30th of the month, pay multi-choice. And then it comes to a statement now. A statement is a summary of transactions. Debits, it's a summary now. The statement summarizes everything. That is the one that you'll be looking at. Every month you'll get a statement via email or via post, and then it will show the transactions that took place, the debits, the credits, payments or receipts made on your account or on an account. And then with the installment, boys and girls, remember now I am doing terminology that is there, or that we use in financial documents. I am doing that terminology as a whole in totality, so that when we go to the practice exercises, the examples, you know these terms. You have seen them. It's not like it's for the first time you are seeing this term, and then when the examiner asks you a question to say define or explain the term installments in the given context, you'll be given the document, and then now when they say in a given context, it means they want you to explain it according to what you are having there to say. Now, what is an installment? One of several payments that you make over a period of time to pay something that you can use while you are paying for it. Example, a clothing account monthly installments. So I know, like I've made an example to say I have an account at Woolworths. At Woolworths, every month I go there. Maybe I spend some money, I buy clothes, I buy goodies, the things that they're selling there. They've got beautiful clothes. I go there and buy. But because I don't have cash, I am going to pay them in bits and pieces on a monthly basis. So on a monthly basis, I will be paying back the money that I have used while I am wearing the clothes. So it means I go there, I take the clothes in credit. Now, listen to me. I go to Woolworths, I take the clothes in credit because I don't have money to buy those clothes. So then on a monthly basis, I must pay back the money while I am using the clothes or the items that I bought from my store. So that is why I'm saying installments, you pay in bits and pieces, but you know what? When life is good, you can pay all the money back. But if things are not working out, there's a minimum installment that you need to pay. So you'll be only focusing on that minimum installment. Now, let's have a look at this one. The tax. Tax is a compulsory levy imposed on citizens earning or purchase to fund the activities of government. A compulsory levy, a tax, it's a compulsory levy imposed on citizens earning or purchase to fund the activities of government. Each and every single one in this country, like I have indicated, we pay tax. When we are working, we pay personal income tax, and then when we buy, we also pay the very tax. The goods that you are paying, they are also having tax added on them. In our country, okay, fine, before I go to the VAT, taxable. What is taxable? We say a service purchased or an item or earning that has a tax tax applied to it. So these terms, when are we going to use them effectively? When we are doing the topic taxation. But here I'm just highlighting to say the tax is part of what? It's part of finance, and then the tax again, it is there on the financial documents. Remember now, you'll be getting what? You'll be getting your IRP5. And then with an IRP5, it will indicate the tax that you need to pay. So, and then again, when you buy, or sometimes there are stores that will show you the tax for services, they are charging a tax. Remember, we said tax, it's levy. So they will say these services are taxable. There are services that are not taxable, but there are services that are also taxable. So when you purchase services, will indicate that these ones are taxable or these ones are not taxable. And then we have the VAT now. Remember, I said everyone is paying VAT. With VAT, we are saying VAT is a value-added tax. With the value-added tax, it is a tax that is levied at 15% currently in our country. Meaning all the goods, even the tablet, the pen that you are using, it is having VAT added on it. So now we are saying, what is value added tax? Value added tax is a tax that is levied at 15% currently in South Africa on most goods and services, as well as on the imports of goods and services into South Africa. So those clothes that you are ordering from Temu, online shopping, they also have VAT. We are paying VAT towards those. So those goods, when they import them coming into our country, they need to pay tax. And then we have the VAT exclusive. With the VAT exclusive, it is the price before VAT is added. Remember, we said our VAT value is what? 15%. VAT value or the tax levied, it is 15%. And then the VAT exclusive, it is the price before VAT is added. This is very important, the price before VAT is added. And then the VAT, this is exclusive, the VAT inclusive price, it is the VAT after. This is the price after VAT has been added. So meaning, if it is exclusive, VAT has not been added. 15% is not added. And you must take a look. Like I've indicated, there are stores that will give you the price item. They will say, this item cost what? It cost 13 rands. And then after it costs 13 rands, they will show you after VAT how much it will cost. So they will calculate 15% of 13 rand and add it to what? To the 13 rands, and that will be a VAT inclusive price. But the VAT exclusive, it is without VAT added. So you just need to remember that the VAT inclusive and the VAT exclusive. But you'll see when you do it in totality. So boys and girls, like I said to you, I am going through all the terminologies that you are using when it comes to what? To financial documents. Now let's continue. Installments, one of several payments that you make over a period of time to pay for something that you can use while you are paying for it. I have already explained that one. So installment, you make payment. You make several payments over a period of time to pay for something that you are using. And then the due date. The due date, it is the date by which you have to pay an account, or the account must be paid. The date by which an account must be paid. So when they say the due date, sometimes they give you 7 days after month end. They will say the due date, it is on the 7th, by the 7th actually. By the 7th. So it means you can pay the account before the 7th of the month, or yes, you can pay either before or on the 7th of the month. So on the 7th day of the month. So now that amount, it is due on that particular day, or during that particular period, 1 to 7 days. So if you don't pay, they will charge you an interest. But we are not there. I'm just highlighting. We are not there. With the payslip, boys and girls, don't allow somebody to employ you if it is a just 1 day job. Yes, if it's a 1 day job, a piece job, then you get paid after working. There's no paperwork needed. They just pay you immediately. But if you're going to work for a period of 5 days, then you get a wage. But over a period of a month, it becomes a salary. On a weekly basis, it's a wage, and then over a period of a month, it is a salary. And then now what we need to know, we say a pay slip. What does a pay slip entails? It's a record of information about remuneration. What is this word, remuneration? How much are you paid per day or per hour or per month? It needs to be clear there on the record, on the pay slip, to say this is how we are remunerating you, this is how we are paying you, so that you know, even if they say to you, you must work overtime, at least you know, oh, if it's an overtime, this is how much I am going to get paid. And then we have a payment made, a wage. I've already touched on this one. A wage is a payment made for a work based on an hourly, daily, or weekly, or a piece work rate, or a piece, sorry. A payment, we say a wage, it's a payment made for work based on an hourly, daily, weekly, or a piece job. So a piece work rate also includes overtime. Remember, I have already spoken to that, to say you need to know, if I work overtime, how much are they going to pay me per hour? Or maybe an hourly rate on the work that I have done. So how much are they paying me per hour? So that I know, if I have worked for 24 hours, how much am I going to get paid at the end? If I've worked only for 3 hours, how much am I going to get paid? And then with a salary, boys and girls, we say a salary is a fixed payment. A fixed payment for work in a pay period based on an annual total, and is not dependent on hours worked. So now with a salary, whether you are sick or not, you'll still get your salary, because it does not depend on the hours worked, or on the number of hours worked, but it is a fixed payment. If I get paid 10,500 on a monthly basis, so every month I know I will get paid 10,500, and then that amount, they will pay it to me for a period of what? Of an annual, of a year. If there is an increment, they will increase my 10,500 with a certain percentage, and then that will be my new salary. So that is why we are saying it does not depend on the hourly hours worked, but it depends on the fixed amount that you are getting on a monthly basis. And then coming to the gross income. Remember, now we are on a salary. We are looking at the pay slip now. On the pay slip, the gross income. What is the gross income? We say the gross income is the total amount of all individuals' income before. So it's an income before deduction. With a gross income, it's an income before deductions. And then what are the deductions? Deductions are expenses that are subtracted from a gross income. What are those examples of deductions? We have loans, a home loan, it's part of the deduction. We have tax, it's part of deduction. We have a pay as you earn as a part of deduction. We have medical aid as a part of deduction. If they are taking it out of your salary before you get money, before the money is deposited into your account, to your bank account. So those deductions, we call them what? We call them the those expenses that are deducted on your salary from the gross income, we call them the deductions. And then what is the net income now? And net income, it is the income, it's an income received after. If you check, we said deductions, it's an in a amount subtracted or expenses subtracted from the gross income. That is what? That is deduction. And then gross income, individual's income before. So what is important? Gross income, it's before, and then the net income, it is after deductions. So after deductions, the money that you'll get, the money that will be deposited into your bank account, that is what you call a net income or a take-home income. So it means that is what you are taking home. And then with the UIF, we say UIF, it is an unemployment insurance fund. Unemployment insurance fund. That's where UIF, the acronym UIF, comes from. What is this UIF? It's a fund set up by government which gives short-term relief to employees when they become unemployed or unable to work due to illness, maternity leave, or adoption leave. So if maybe they say your contract has been terminated, you are unable to work, then you'll get paid via what? Via UIF. Remember, you've been contributing. And how much are we contributing? We are contributing 1% of our basic salary. But that 1%, it is limited to a value of 17,700 per annum, which is 177 per month. So they say it is a maximum, a ceiling. So it means that if you are earning more than 17,000, they can't take. If you are earning 18,000, 19,000, they can't be taking more than that. They will only end at 17,000, and then the employer will contribute 1%, and then the employee, so meaning here it is an employer, and then here it will be employee. So meaning I contribute 1%, and then my employer also contribute 1%. In total, it will be 2% taken away, taken to the UIF, to the insurance fund. That money will help me when I am unable to work due to illness, due to being in maternity leave or adoption leave, or maybe I'm unable to work, the contract has ended. And then we also have allowance, amount of money allowed for certain activities. Example, a car allowance is the amount of money provided by the employer that is dedicated to petrol, wear and tear on the vehicle. So meaning if they give you an allowance, they say, use your car, but we'll give you petrol money. But that money is not only for the petrol. You must also take the car to the service. You must also buy the tires for that vehicle. Any service, any wearing of tires, you need to replace those tires, and the petrol is there as well. That is allowance. When you're at varsity, or those who are maybe still at school like yourselves, your parents are giving you an allowance to say every month will give you a certain amount of money for what? For lunch. That means you don't need to ask money during the month. They'll give you 500 once off, and then they say, there's your money. With that money, don't tell us that you've run out of lunch money or stuff. So that is your allowance. You can do whatever you like with that money, but it must last you for a period of a month, because now you'll get the other allowance the following month. And then the loan agreement. A loan agreement, it's a contract between two parties. It is a contract, an agreement. So meaning I am agreeing with you to say, I am borrowing you the money, or I am lending you the money. After I've lended you the money, this is a contract that you are entering to say, if you don't want to pay me, then I can take you to court, for example, to a small claims court, to say, this person took a loan, I've lended them the money, but they don't want to pay it back to me. And then it says a contract between, a loan agreement, it's a contract between two parties whereby the lender gives money to the borrower. Because I'm the borrower, this person is the lender, the bank is the lender, they're lending me the money. So it means it is a contract between me and the bank. The bank is the lender, and then I am the borrower, with an expectation that money will be repaid. When you borrow somebody, when you lend somebody the money, you lend them knowing that they're going to pay you back, together with what? With an interest. It's like, go and use my money, but when it comes back, it should be having an additional money on top, by means of monthly installments within a fixed time of period. So they say, go and use, but every month I need this portion. Like, I don't have money to buy a car cash. I saw a nice, beautiful car that I love at the garage. But do I have, maybe that car is 500,000 or 700,000. Do I have that cash with me? No, I don't. Then I go to the garage dealer and say, I love this car. I want to own one, but I don't have money. Then they say, okay, fine. Let's speak to the bank. The bank will be what? Will be our lender. And then the bank will pay the garage, the dealer, the money. And then I myself, I have to pay now back who? The bank, because they have borrowed me what? They've lended me the money to do what? To buy the car while I'm using it. And I'm going to pay it with an interest over a period of 5 years, which is 60 months. And then I'll pay it on a fixed, on a monthly installments. So every month I have to pay my portion up until I finish my 60 months. Then the term loan. A term loan, it's a fixed time period in which the loan needs to be repaid, and usually stated in months. Like I just made an example to say now to say over a period of 60 months. So meaning I am going to pay on a monthly basis a certain amount of money on a monthly basis. So that will be my what? My term of loan repayment. It will be over a period of 60 months. When they ask 60 months in years, it will be 5 years. But I know that I have to pay that amount of money back over that period on a monthly basis. I don't have to skip a month. I have to pay it on a monthly basis. Boys and girls, now let's go to the real thing. We are done with the terminologies. Now let's have a look at the till slip. This is a part of financial document. Here is just an example of a till slip, and you are familiar with the till slip. This till slip is from ShopRite, and then the telephone number from ShopRite, and then the address of that ShopRite. And is this a ShopRite tax registered? Yes, it has a VAT number. It is registered. And then which items did I buy? The items listed. All these items listed here, from the standard bread to the right brand tea bags. I bought those items, and each item, it has got its own amount, value. And then how much did these items cost me? They cost me this amount. This is the total amount of items that I bought. And then now again, what is important, it shows again which method of payment did I use. Did I use cash? Did I use electronic card, which is a debit card? So it says electronic payment. It means they paid using a card, they swiped. So here it indicates an electronic payment. This amount was taken out, just debited. Remember, I'm swiping, money is going out of my account. And then now here they show us the VAT, it is the rate of 15%. And then how much in monetary value is that the VAT of this amount that has been added? So they've added 40 rand 58 cents. So in total, this is what I am going to pay. And then here it says the date in which the purchase was made. So it says retain. Okay, please keep your till slip as a proof of purchase. Need more information? Mobile. Okay, need more information? Who's the person who was helping? Is Buhle, the cashier who was helping me. So all this information is there on the till slip. Even if when you get home, or maybe you are watching this from the comfort of your home, there are lots and lots of till slips lying in the drawers at your home. Have a look at those. That is a financial document that shows a proof of purchase of items that you have bought. Now, boys and girls, let's have a look at the exam type questions. How the examiner asks the terminologies, all those terminologies that you have done, and then interpretation now of the financial documents. Remember, we started only the first slide, the one that we just did, it was a till slip. It was just an example of till slip. But now, remember, we said we'll be focusing on the financial documents, the salary slip, the types of financial, the invoice, the quotations and stuff. So now here is just an example of what? Of a salary slip. Which information is contained in the salary slip? Number one, it will show the employer. Who is this person? Who is the employer here? eThekwini High School. And then who is this salary for? It is Mr. Dlamini's salary, Lwandle Dlamini. And then the period of payment, it is from when? 1st of April 2022 to 30th of April 2022. So meaning it's a period of a month. And then the address of the school. This is school's address. And then this is the name of the school. And then the name of the employee who works there. And then the period is from when up until when. And then this is their ID number. And then the employee number. Remember, each and every single person has an employee number, the number that identifies you. So when they pay you, they use an employee number because that number identifies you as an individual, to say this number. If I see this number, that number says this is Mithala Chia, and then Mithala Chia has worked for this period of time from the 1st of April up until the 30th of April for that particular month. And remember, we said a salary, it does not depend on the monthly, it does not depend on the hours, but it is a fixed amount paid on a monthly basis. And then we say the employment date. When were they employed? They started working when? On the 1st of January 2022. Where do they live? They live at 14 Morningside Court, Durban. And then their bank account, they're using Standard Bank. There's their bank account. That's where the salary is being deposited. Now let's have a look at this one. This one, this part, I like this part. It says an income. Income, it is what is coming into the salary, the amount of money that this person is getting before deductions. Now, this is a basic, the gross income. So now when you have a look here, we have the basic salary, and then they have a laptop allowance. Remember, I said they will give you, or they will say to you, okay, use a laptop, and then, but with that laptop, you need to do 1, 2, 3. We will pay. When it comes to a car, they will say you can use a car to drive to work, but we will give you the allowance for petrol and wear and tear of the car, meaning the maintenance of the car. That money will help you to maintain the car. That money will also help you to pour petrol to come to work. So with the laptop allowance, they have their own laptop. So they say, because you are using your own laptop, we have to maintain that laptop. If it gets broken, you are able to take it to someone to replace it, to fix it. And then you have the medical aid. They're giving them the subsidy, they're giving them the medical aid, the housing allowance, they're subsidizing them. And then now we have what you call deductions. We said deductions, the money that spent from where? From the salary. Now, here we have tax. We have tax as part of deductions. UIF says Old Mutual retirement annuity. So it means this person is spending money on a monthly basis on this, and the total deductions is 4,507 rand 37. That is the total deduction. And boys and girls, as you are interpreting the financial document, you can see here it says RA. Note RA. What does RA stands for? It stands for retirement annuity. So you need to have a look at this before you can even attempt to answer the questions. Go through your financial documents, look at the information that is provided, because the answers are from there. The questions will be based on this document and the answers are there. It's not like you have to go out and search for the answers. Already the answers are there. Now it says Luanda Damin is a young first-year mathematical literacy teacher in Durban. Luanda is employed by the eThekwini High School governing body. He receives a copy of his salary slip via an email. So it means month end, he doesn't get a salary slip, hard copy, but he gets it via an email. And now let's have a look at the questions now. Here's our salary slip. Now question 1, it says use the information, use the alongside information to answer the questions that follow. So it means I'm going to use this document, this financial document, to answer these questions. Calculate how many months Luandle Dlamini has been teaching at this school. Now, if you have a look, when was he employed? He was employed on the 1st of January 2022. And then this salary is for which period? It's for April. So meaning Luanda has been working at that school for how many months now? It is 4 months. Can you see, boys and girls? Already the answer is there. When did they start? Employment date, they started on the 1st, and then the salary is for which period? It is for the 1st of April up until 30th of April. So it means it is the salary for the month of April. So if you check, I've worked January, February, March, April. So it is 4 months. Let's move to the next one. Now it says, give the name and address of Luandle's employer. Remember we said who employed Luandle? The employer is eThekwini. The name of the school. This is the employer. Oh, sorry. eThekwini High School. This is where Luandle is employed. And then it says, give the name and address. Remember now, I have to read the entire question, not answer a part of. If I leave the answer as eThekwini High School, I did not answer the question in full, because the question says give the name and the address. What is the address? It is eThekwini. Remember I said here, this is the address of the school, which is 23 Protea Road. And then you write it in full. Morningside. Morningside, Durban. So now this is the address. So it means when the examiner asks, give the name and the address, you have to write the name of the school, and then you also have to write the address. This is what is required, not only the name, but the name and the address. List 2 monthly deductions Luandle pays from his salary. Now here are the deductions. Remember, I said this, it indicates the deductions. What is it that Lwandle is paying for? Here is a list. You can choose any two because the question says list two monthly deductions. So you can say the deduction will be for tax and UIF, or you can say says and what? Old Mutual RA, retirement annuity. And boys and girls, it's not like you have to put them the way I've put them. Just select any two of your choice. That will be the correct answer. You see, the answers are there. You don't have to think hard because the financial document, all the answers are there. It says, calculate the next one. Calculate the amount that Lwandle receives for housing allowance or for housing per year. How much is Lwandle receiving for housing per year? So now, on a monthly basis, Lwandle is receiving, let me do this, housing per year. Okay. This is a question. Housing pay? Yeah, that's what you want to know. So housing per month is what? It is 500. And a year, it has got how many months? It has got 12 months. I'm just making it simple for you. So meaning when you answer this, you don't need to write all that I wrote here. I'm just showing you. You just say 500, you multiply it by 12 because it is per year. Don't forget, our friend, always there is no soldier that can go to a war without a gun. So also ourselves, we can't go to mathematical literacy classroom without a calculator. So let me quickly fix my calculator. I can see it needs to be reset, and it's so easy to reset. Ask your teacher to help you to reset. Please don't tell me that your calculator is not working and then you say, ma'am, my calculator is not working. No, you just need to reset your calculator and then you say 500, we multiply it by 12. It will give us what? 6,000 rand. This is what Lwandle is receiving for housing per year. The next question says, calculate the missing total income amount on this salary slip. So the total income here, there's the question that says, calculate the missing total income. Now the total income is equals to, we take the first one, the basic salary. How much is that basic salary? 22,156 plus 1,500 for laptop allowance plus 800 rand plus 500 rand. So let's quickly go in, use our calculator. So now our total income, it will be 22,156 cents plus 1,500 plus 800 plus 500 rands. So all in all, it will be, the total income will be 24,956 cents. 24,956 cents. This is the total income. That is the answer for this one, the missing value. They just needed you to answer, to add those amounts because they said income, the total income. You just add the amounts. Now let's move to the next one. It says determine with the use of calculation the missing tax amount on this salary slip. So now the missing tax amount, boys and girls. Here's a missing tax amount, and then this is the total deductions. For me to get the total deductions, it's so quick. Then I can say missing amount, missing tax amount, is equals to, I can simply say 4,507 rand 37. Then I subtract the 177 rand 12 cent. Then I subtract the 15 rands. I subtract it's 15 rands. Then I subtract 1,500 rand from the 4,500. So let me quickly do it. It is 4,507 rand 37. I subtract 177 rand 12 cent. I subtract 15 rands for sales, and then I also subtract 1,500 rand. So meaning the tax, it is how much? It is tax amount will be 2,815 rand 25. That is our tax amount. Can you see, boys and girls, it's so easy to answer these questions because now we have done the salary slip. The net pay, we say calculate the missing net pay, and we said net pay, it is the gross income minus the deductions. So with the net pay is equals to gross income minus deductions. So now, how much is our gross income? Our gross income, quickly let's check. Okay, I will do it. Let's see the deductions because we have the deductions. Let's quickly re-add there. It is 22,100,56, or 22,156 cents plus 1,500 plus 800 rand plus 500 rand. We said this is the total amount, the gross income. It is 24,956. Then we subtract the deductions. Here's our deductions there, which is 4,507 rand 37. Now we subtract that amount from the total income, and then we are left with, this is the net income now, 20,393 rand 19 cent. This is the net pay. This is the amount of money that will be deposited in Lwanda's account, the Standard Bank check account. Now it says, calculate what percentage of Lwanda's basic salary. Lwanda's basic salary goes towards his retirement annuity contribution. So what is Lwanda's basic salary? Here's Lwanda's basic salary. And then retirement contribution is what? Old Mutual RA, it's 1,500. So we just simply say 1,500 because we want to know the percentage that goes there. It will be 1,500, and then I divide it by the basic salary, which is 22,156 cents. So let me quickly do it, and then the percentage will be 1,500. Oh, don't forget, because it's a percentage, you have to multiply by 100. So we say 1,500, we divide it by 22,156 cents. then we multiply it by 100. So let me quickly write the final answer. I'll come back to this step, the one that I've skipped. The answer is 6,7871,58,334, and then it is in a percentage. And remember, we don't write a percentage, we don't leave it as it is, but you have to round it off to 1 decimal place. So it will be 6,8%. So let me just do this, divide this by 100. I want that answer. This is 0,067871 and all these other digits. So boys and girls, can you see how simple it is? Here you have to rewrite all these digits that you'll get after you have punched 1,500. You divide it by 22,156, and then you get 0,067871,583, and then you multiply it by 100%. And then remember this 100, they said what percentage, so meaning 6,8% of Lwanda's salary goes towards the retirement annuity from Old Mutual. Now let's have a look at this one. They should be okay. Now it says on this one, we are looking at the invoice now. With the invoice, we are saying this information, use the information alongside to answer the questions that follow. State the type of financial document shown on this page. Now, boys and girls, as you look at this financial document, here it does state to say PO box, it is Cathedral Peak Hotel, and then there is the room number, the arrival date, the departure date, number of guests in that hotel or in that room. It's 2 adults and 2 children, and then who's the main member there or the main person. It is Michael Smith, and then the address of Cathedral, there it is, PO Box 208 Winton, and then the VAT amount 3340, the VAT registration number, there it is shown. And then here, as you continue, it can tell you all this. This says it's an invoice to say if you sleep for first day on the 25th, this is the amount you pay, and then KZN permits, and then tourism permit. So these amounts, they are included there. So everything. So now they show you the charges. What are they charging you on a daily basis on the 25th, 26th, all the days that you have slept there. So now it says what type of the information alongside to answer the questions that follow. Use that. State the type of financial document shown on the page. This is an invoice. We can say it is an invoice, or maybe because it does show that the amount to be paid and the credits. Sometimes some of them, they say it's a quotation. So if they're quoting you, or maybe if they're invoicing you, so we can say it's an invoice or a quote. They quote you. So meaning they quote, it's a quotation. They tell you that first day, this is what you are charging. Remember, we said it is in detail, and a document that will be in detail. Now the second one, it says determine the total number of guests indicated on this financial documents. Number of guests, look at me, straight to the answer. Number of guests, number of guests, it is 2 adults plus 2 children. So you can say the total, it is 4. It is 4 guests. This is the number of guests. You see, boys and girls, you can either write it as 2 adults plus 2 children, or you can just say 4 guests, because we said the number of guests. It is 4. And then let's move to the next one. State how many nights the Smith family plan to stay at the Cathedral Peak Hotel. How many nights? Let's check the nights here. The first night, it says transfer deposit check in. So meaning as they check in, they will be checking in on the 25, and then the 26, they'll still be there. 27, they're still there. 28, they're still there. And 29. So meaning it says stays how many nights? It is 1, 2, 3, 4, 5. So it's so simple. 5 nights. It is 5 nights, because a question says how many nights. So you just check the dates: day 1, day 2, day 3, day 4, day 5. And then determine the daily cost of the family. Determine the daily cost the family will pay for accommodation. So now, what will be the daily cost now? So on a daily basis, this is what the family will pay. It says accommodation stay 5 or more nights. So it means it's how much? 4,310. That's it. Answers are there, boys and girls. You don't need to scratch your heads. Let's move to the next one. Calculate the total cost of accommodation for all the days. So we said per day, it's what? It's 4,300. And then total cost. Total cost for 5 nights. For 5 nights, it will be 4,310 multiplied by what? By 5, because that is what we call a total cost of their stay at the hotel. Now the total cost here, let's quickly go to our calculator. 4,310, we multiply it by 5, it will give us 21,550. Boys and girls, I hope you are enjoying yourself as I'm enjoying myself, because now the answers are right on my fingertips. I don't need to scratch myself. I don't need to stress. All answers are there. It says name 2 other daily costs besides accommodation that Michael Smith needs to pay. So the other 2, remember, they were only focusing on what? On accommodation. Now the other 2 that Michael needs to pay, it will be what? KZN permits. KZN permits, and what? And the tourism levy. So these are other 2 costs that Michael will have to pay on a daily basis. Show using calculations how the total amount of 21,814 rand was calculated. Where is that amount? The 21,000. So now when you have a look here, it says total due. The subtotal, it is meaning when they add everything here, they get to what? To 22,264 after adding everything. Now the credits, they are crediting them the deposit. This is the deposit that they have paid. So now they're saying the total amount due, it is 18,276. But this 18,000, it is VAT exclusive. Now they say the amount including VAT, it is 21,814 rand 50 cent. The amount excluding VAT, it is 18,969 rand 13 cent. So there are 2 ways that you can do this. You can simply say, okay, fine, what is the balance? I can quickly say the balance, it is 22,264 rand 50 cents. That is the total amount. Ne? And then now what are we subtracting? What are we subtracting? We'll be subtracting the balance, the VAT amount. So now here, boys and girls, what we can do, let's quickly do it the reversal way and see if we get that amount, the 21,000. For us to quickly check, we can say, okay, fine, 21,000. Remember we said with the total amount excluding VAT, there are two ways. I can simply divide or maybe do the full calculation. 22,000 200 and let me create 22,264,50, and then I subtract what, the 18,000 276, 30. That is 3,009. Okay, it's fine. This one is correct. So meaning I must take this one, the 18,000 now. And then it will be the 21,814 rand, 50. And then I just divide it by what? By 1,15. Simple way. Then it will give me that 18,960. So now, boys and girls, there are two ways. Remember the VAT inclusive and the VAT exclusive. So now I can simply say do it in a simple way, because now they say, how did they get to this amount of VAT exclusive? This one, they want to know how did they get to the amount including VAT. So now we just need to calculate, okay, to say now, since I've got this, how did they get to that amount? So we'll definitely use this one. Let me just cancel this one out, because now I want to know. So it will be the 18,900. It will be 21,814,50. I just quickly divide it by 1,15, and then I get that amount of what? I get this amount of 18,969 rand, 13043. And then from this amount now, I can simply say this one, subtract what? Subtract the 21,814 rand 50. That will be, oh, I made a mistake. 21,814 rand 50, and then I must subtract. I must just divide it, not subtract. Divide it by 1,15, and then it will give me the 18,969. Then I say this minus 21,814 rand 50. That gives us 2,000. That will give us what? The 2,000, because now here the question says, how did they get to this? So that means I have to add all these boys and girls to get this amount, the 22,000, and then I just subtract this 450. So I can do it this way. This one, it will be the VAT exclusive, and then the VAT inclusive one, 22,264,50, and then I subtract all these amounts. Remember, this amount, it includes all this. Quickly, the shorter way of doing it. This amount, they add up to 450. And then the total amount, it will be, if I add this, the 90 rand, 90, 90, the 52 rand, 90. So I just add this. I just add these amounts, 52 rand, 90. I add all these amounts that I have circled. They will add up to 450, and then I just simply say that one. It will give us the 21,814 rand 50 cent. So this is what you'll get when, after you take all this amount, the 22,000, and then you subtract all these ones, all these amounts, then it will give you that one. Remember, we added the amounts without a VAT. Now calculate the missing VAT. That one I have already done it on that slide, whereby we said quickly the VAT exclusive. The VAT exclusive amount, because here it says the VAT amount. So this VAT amount, you can determine it by determining the VAT exclusive. So our VAT exclusive now, it will come from this 21,814 rand 50, and then I just divide it by 1,15. It will give me 18,986. Let me quickly do it. I can't see clearly here. 21,814 rand 50. Then I divide it by 1,15. It will give me 21,814,50 divided by 1,15. Then it will be change 18,006, not 9. Sorry, boys and girls. It is 18,969 rand 13. Because it's money tag, I just round it off to 2 decimal places. So we say the VAT amount, it will be 21,814,50 subtract 18,969 rand 13. Then subtract 21,814 rand 50. Then my amount, remaining amount, will be 2,845 rand 37. I've just rounded off to 2 decimal places. So boys and girls, here it's so simple. Again, we are doing the VAT exclusive and the VAT inclusive amounts. So boys and girls, now let's go to the next question, because we are running out of time. Quickly, let's work it out. It says the table, use table 1 and the information alongside to answer the questions that follow. Explain the meaning of the term cost in this context. Now here what we are having, it says table below, it's an extract from Tsepiso's cell phone contract bill, the cost of the device and the usage summary. So now here, if you check here, it says the national fixed lines. This is what she has used, and then this is what they are charging, and then they say cell C calls, so meaning cell C calls, and then here it is the unknown, we don't know, and then other mobiles, they this person did use 127 minutes, and then they've charged them 112 rand 25 cent, and then 6 SMSs, and then they're free, they did not charge, and then they placed a recharge amount, and then they got the recharge amount of 400 rand. Now it says use the table and the information alongside to answer the questions that follow. Explain the meaning of the term cost in this context. So what is the cost here? It says the cost is amount charged. Amount charged for the device. For the device. Which device? For this cell phone. This is what they are charging. Here it says cost of device. So now with the cost, this cost, it explains the amount charged for the device. This is what they are charging for the device. This is the total cost of the device, and then the monthly payment, the outstanding commitment value, and the current month, it is 21 of 24 months. So meaning they are on the 21st month of the contract of 24 months. Now let's quickly check. It says use the table and the information alongside to answer the questions that follow. Identify the total cost of the device. So this is the total cost of the device. The answer is there. You don't need to scratch your head. The total cost is equals to what? 6,399 rand. 6,399 rand. So this is the total cost. You can either identify it from here, or you can take this and then you multiply it what? By 24. So even if I can say maybe the monthly payment, and then I multiply it by what? The monthly payment, it will be how much? 266 rand 62. I multiply it by the number of months, which is 24 months. Remember, it's a contract. It is for a period of 24 months. So it will be 266,62. We multiply it by 24. And then it will give us the same amount of 6,399 rand. Remember, they have rounded off these amounts here. So now it will be 6,399 rand, the total. So it's easier because we are given what is called the total cost. You just take the answer from there. Now let's quickly move to the next one. It says, write down the number of outstanding months for this contract. So the number of outstanding months, the total contract term is 24 months, and then this one, it is statement number 21. So 24 minus 21, it is 3 months. So this person is left with, Tepiso is left with 3 months to finish paying the contract. So the answer is there, boys and girls. As you can see, it says calculate A, the amount charged for cell C calls. So now how do we get to calculate the value of A? Now it says here the recharge amount is what? It is 400 rand, ne? And then SMSs are free, and also the other mobile network cell calls, it's 112, and then here the national calls, it is what? 11 rand 5 cents. So meaning here it is the total amount. So now we want to know the value of A. So say A is equals to 400 minus 112 rand. Remember, it's monetary. And 112 rand 25 cents minus the 11 rand 5 cents. So let's quickly use our calculator. 400 rand, oh, not 4,000, 400 rand minus 112 rand 25 minus 11 rand 5 cents. So the answer will be the total cost for the calls in rands. It will be 276 rand 70. Boys and girls, because it's monetary, you don't leave it as comma 7. You have to add the 0 there. We are talking about the money. Now let's quickly have a look the difference between the amounts used for other mobile calls and the amount used for national fixed calls. So other mobile calls, it's what? it is 112 rand 25 cents. And then here's the other mobile calls. And then the national fixed line, because they said the difference. Now the difference now, then what we have to do, it says determine the difference between the amount used for other mobile calls and the amount used for national fixed line calls. So amount used for fixed line calls, it will be 11 rand and 5 cents. So quickly the difference there will be what? Will be, oh, this is the amount charged here. It says the amount used. You see, boys and girls, where I went wrong. Here, I did not read the question clearly. It says the amount used, not the amount charged. This one, it is an amount charged. This one is an amount charged. So now the amount charged, let's quickly do it, even though it's not needed. It's 112 rand 25 minus 11 rand and 5 cents. So the amount charged it's 101,20. But did the question require amount charged? No. They did not require the amount charged, but they said the amount used. So amount used, let me write it here. The amount used will be 127,127 minus 12. Because fixed line calls is 12. It is 127 minus 12. That will be 115. This is the amount used in minutes from calls, other mobile calls, and the national fixed line. Now quickly use the table again to answer the questions that follow. Express the monthly payment. Express the monthly payment as a percentage of the outstanding commitment value. So how much is our monthly payment? Here is our monthly payment. Our monthly payment, it is 266 rand 62, and then we divide it by what? The outstanding commitment value, it is 799 rand 98 cents. And then because they said as a percentage, then we have to multiply by 100. It will be 266,62, and then we divide it by 799,98. Oh, then you multiply the answer by 100, and it will be 33,328,321%. So that means it is 33,33%. The percentage of outstanding, the monthly payment as a percentage of the outstanding value. And let me do, boys and girls, I'm just going to do the last two because we are running out of time. Actually, we are at the end of our session, but let me just complete this one. You'll see that it's so nice when you are doing the financial documents. You don't even have a look at the time. So alongside is a bank statement for Linda Dalmakis, Rudy's wife, for 19 May 2024 to 19 June 2024. Determine the date on which Linda's bank balance was at the lowest, or was the lowest. So now you look at the balance. Here we have the service fee, the debits. Look at the debits. The debits are indicated by a minus, meaning with a debit we are looking at the minus. Remember, that's what I said. And then the credit, it becomes a plus. This is the credit, is money coming in, and then the debits, money coming, money going out. Now it says use the information alongside to answer the questions that follow. Determine the date on which Linda's bank balance was lowest. So here the balance was 33,804 on the 19th, and then On the 22nd, it was 33,914. Because it's a minus, it's still going. And then now, look at the 25th of May, it is at 40,009 rand 43 cent. So if we check, it is the lowest because it is a minus. So when we say a lowest, we say if the further away is the amount from the positive amount, that is becoming the lowest. So now if you check, if they pay the salary of 30,000, for example, and then I'm owing minus 40,000, it means minus 40, it is the lowest, meaning I'm earning a lot of money. But if I'm only owing them 25,000, it's better, but 40,000, it is more. So on which day? It is on the 25th of May. On the 25th of May, because check from here, the money, it was 40,000, 40,009 rand 43. From there, salary, something came in, the deposit came in, the amount went down, and then they used the bank account. From there, something, salary came in, then the amount started to go up. Now it's positive, it's no longer negative. It means after the salary B, or after the amount is the salary B, then that's when their installment, their balance was becoming positive. Now let's have a look quickly. The salary B, how much has been deposited into that account. So now, if for me to get this amount, I have to take this amount and then add this one, then it will give me this one. So meaning the positive balance, it is 5,206 rand 91, and then minus, remember now I'm doing the reverse calculation because this amount is negative, it is minus 38,304 and 43. So what is the total salary? Quickly, it will be 5,000. It will be 5,206,91 plus now the 38,304 and 43. So it is 5,206 rand 91 plus 38,304 rand 43, and then it means they got paid the amount of 43,511 rand 34. So boys and girls, you see, with this, it's so this is the value of B, because that is the salary. Boys and girls, when you do financial documents, you just need to interpret the document as you see it. The answers are all there. I hope you have enjoyed this lesson, and I hope you'll use the terminology that we started with. Be familiar with those terminologies so that when you get a question that says explain this term based on the given context, so it means you'll have to have a look at the given financial document and then answer. And from there, you are familiar with the words. When we talk about the credits, you are familiar with the credits. When you talk about the debits, you are familiar with the debits. To say the debit is the money going out of the account, the credit is money coming into the account. The balance, if the balance is negative, it means you owe the bank. If the balance is positive, it means the money is yours. You don't owe the bank anything. Boys and girls, I just want to thank you for sitting and watching this lesson, and see you next time. I hope you'll go back and do the revision of the work that you have just covered for today. See you next time. Bye bye.